After taking a losing trade, I see many traders in the community put their head down. They walk away from the screens because not only did they not win, but they feel like they failed because they lost money. 2 days this week, I started the day off red by taking a really good setup, and I just did not work out and I lost money on. But instead of walking away and putting my head down, I focused on another opportunity and took two solid winning trades following the same process, and I turned a red day into a green one. In this video, I want to break down the four trades that I took, along with market context and some psychology tips that I'm confident is going to help you all out in your future trades. All I ask is if I provide any value to your trading, I would appreciate a thumbs up on this video. And I also recommend you all to follow me on Instagram at Ameritrade. I'll post a link for this in the description below. I post daily trading recaps on here, along with very good trading tips and tricks that I guarantee you are not going to find anywhere else. But now, let's get right into the video. First trade was on Monday, May 9th, and it was on the S&P 500. It's very important for us to understand kind of the context backing this setup and why I took it. So I'm going to go over the pre-market plan. I post these every single day in the Discord, setups I'm watching, levels I'm looking out for. It is free and only included for Trade course members. Link in the description below. But essentially, market context is a very important aspect to understanding that the story that the market's trying to tell us. We have to comprehend and use context clues to understand the story or the picture before it fully gets portrayed. So really what we've been noticing recently was demand zones not being very reliable and rallies having sold into. And I said that the S&P was in a tough spot here, and I went on voice chat in the Discord before the market was open to kind of walk through this. Briefly, just go to a larger time frame picture here. What I mean by this and where context is very important is that yes, the market is in a downtrend. Yes, we've been seeing some aggressive selling on multiple days a week to the downside, very aggressive volume and very aggressive selling pressure. Whereas every time we get a move up and it does form demand, let's just say in this area right here, the demand zones after the rallies up have not been very reliable. Yeah, we've been briefly bouncing out of them, but there really hasn't been met with strong buying to really reverse a trend and bring the market higher or create new key and important demand zones. So these moves up also have been getting shut down at supply or right near supply. So not only do we have demand not being very reliable, but we also have supply and rallies being sold into, which is another piece of context that sellers are in control. So because of this, and because of the severe downtrend in the market, it honestly has been very tough to play long for a trend trade to the upside, because it seems like at this point the market is just continuously falling, and if you try for a trend to step in front of the moving train, you are going to get destroyed. I always use the analogy to let the train pass. When it moves past you, you can always get back on the tracks and come up with a nice long setup. So demand not being very reliable and rallies have being sold into, and I said it's very hard to be a first buyer for a trend with such intense selling. However, we are coming into demand, and before the market opened up, we had this 40.47 demand zone, 40.22, and then we also had demand a little lower at 39.72. So there was essentially three scenarios that I was watching. I was watching for a dip or a very strong selling below 4,000, but above 39.44 demand to play longs. I was also watching for a rally out of this demand, new demand to form, and play a retest of that new zone that forms once buyers have proved themselves. Or I was watching for buyers to prove themselves above supply. That's going to be more to come with the next trade that I took. So in the intraday commentary tab, this is basically where I update my thought process throughout the day. I said there are two main ways I'm looking to play the market long. The first one was waiting for new demand to form, bounce out of old demand and play a retest, or wait for upside continuation above supply and create value or create demand above at higher prices, slash slice through supply like it's not there with very strong market leading equities. So a couple very important psychology tips here is as the market opened and now we kind of understand the context a little bit better, we didn't really find buyers at demand. There was absolutely no reason to get long at this demand zone. Nothing really here proved that buyers were actively in the market, and we continuously started to sell off. Now, a lot of people see the market moving down and they automatically think that, okay, we're moving lower, let me play the market short, let me play puts, right? Or, okay, the market's moving up, let me play the market long, let me hop in calls. You have to trade when your setups trigger, and the market moving in a direction is not a valid reason for you to enter the trade. So a lot of people see the market selling off in the first 2 hours, and they're like, okay, let me play puts for no other reason than that the market is coming down. We invalidated this demand zone. Again, demand zone's not very reliable. I'm going to remove both of these zones. And the market moved down. I was very patient. I was telling members all day in the Discord that there is no clear intraday action. There's mixed signals. And playing this other than a scalp right now means you're going to get chopped up. We need more information in the market. So then we start consolidating. We start moving up. And it wasn't until about 2:30. So the market was open at this point for about 5.5 hours or 5 hours. And I was very patient, did not put any trades on. You all know me if you've been watching my videos. I'm a very patient trader, and I trade only the setups that I know make me money. And in the first 5 hours, I did not see any A-plus high quality setups that would have offered proper risk and a high reward to make my process or my edge come true. So then we start consolidating right here. And in the Discord, I posted a little update. Pull it up here. I said I'm watching, this was at 2:15. I'm watching the 3990 level. If it gives and we break with heavy selling pressure, I'm open to playing short for a quick scalp targeting the 3972 demand zone, which is this level right here. About 10 minutes later, I said I entered a small SPY put position here, anticipating a 3990 break, and I may add if we do break that level with strong volume. Now, my thesis for the trade, I got in around 2:30 when the market looked like this. I got in around 4:10. I played the SPY 400 puts for Wednesday's expiration. I bought time on the contracts because of how consolidating or how choppy we were and the consolidation phase that we were in. When the market does not have volatility, you got to be extremely careful playing options, especially close to 0 days to expiration or even 1 day to expiration, because if the market continues to chop and it doesn't move in your direction, you're going to get completely destroyed. So I basically front runned this 4,000 level break. My thesis for this was not only were market leading equities weak, but it looked like since A, we weren't finding buyers at demand, B, this rally right here, this was actually new supply that formed right here, and it hit it perfectly. Act like this is a pink box. So obviously sellers are still present, and I wanted to play short on a break below 39.90, targeting this 39.72 demand zone right here. Instead, by watching the tape, I started to see very heavy volume start to come in around 40.10, and I got short my stop above this 40.25 high right here. Then the market started moving. We actually broke the low, and this is a classic trap for retail traders to get short, is if you break a low and we immediately find buyers, that's a good hint that we may reverse, and you got to either protect yourself for your short position or maybe even open up a new long position because we broke the low and failed to stay below the low, and then we got a quick bounce up, and I stopped out of this trade. It was a 17% loss on this quick rally up. Not a big deal. It was a great trade. I followed my plan, and I got in with only 10% of my normal size because I was front running this trade, meaning I got in prior to the actual level break in anticipation that if we did break that 3990 level, I would re-add to my position to make it full size. We never got that break, and that was a quick 17% loss, but only on 10% of my normal size. So it was a very, very small paper cut in relation to my average winners. So then the market starts consolidating again, and then about 20 minutes later, the market started moving down, and I re-entered according to my plan. The same analysis. I saw a very aggressive selling pressure at 40.10. Same exact confirmation signals I saw earlier. I got short. Stop now above 40.20. Anticipating a 3990 break, targeting 3972. I got short, played the puts. Eventually, broke 4,000 with ease, broke the low with ease, broke 3990 with ease, and as soon as we hit this demand zone, I got out my full position, and I made up for that first loss, and I made a lot more profit in relation to that first loss. So the lesson I'm trying to make here is we can't be perfect. We are going to have losing trades. but I see a lot of people in the trading community is they take a loss, right? This was a great setup I took earlier. Everything lined up for me. It was a quality setup. I waited all day for a perfect opportunity, and when I saw that opportunity, I struck, right? Great setup. It just did not work at that moment. I mistimed the market. Totally cool, right? But a lot of people see this. They think, oh, I got to be perfect. I don't want to lose. I want to win on every trade, and I don't want to have a red day, and it really ruins my mood. So people see this. They stop out of their position. They lose $100. They lose $500. They lose $1,000. Whatever the case may be, and they get frustrated, right? Subconsciously, our emotions are in anger. We're pissed off, and we don't want to trade because we don't want to lose any more money. This is the emotional side to trading. So we get frustrated, we shut our computer down, and we walk away. Sometimes after you stop out or after you exit for a loss, another opportunity might happen a minute later or 5 minutes later. You have to be available and not deplete your mental capital, because everything you do in the market is an opportunity cost for a future trading decision. So even though I stopped out right here, it was not a bad trade because I followed my plan and I re-entered with the same intention I had earlier, and I made back my loss plus more profits. And this was a 35% win on this drop to the downside. Hit demand perfectly, and we bounced right according to this plan in intraday commentary. I said I'm open to playing short for a quick scalp targeting the 3972 demand zone. We hit it and we bounced nice at it. And it's funny because on May 10th, on Tuesday, I did the same exact thing where my first setup, I took a loss on and bounced back on the next setup. So same exact scenario on the S&P 500. We bounced off that 3972 demand zone yesterday, hit it overnight, and then we're rallying overnight. So with what I said earlier about really finding buyers inside of supply, essentially if new demand forms inside of supply after bouncing off of old demand, then the chances of upside continuation will be a little bit higher, especially if we slice through it with high volume and it acts like it's not there. So from the pre-market plan, we wanted to see a strong break above this supply zone to really get into the next zone above around 4130. The market opened up. Our plan came true before the market even opened up because we were watching longs targeting the 4038 area. Then we opened up and immediately started selling off and pulled back into VWAP where we found a bid. Now, what I liked here was not only did we bounce off demand, but we also were bouncing off of VWAP, hit supply, pulled back, hit VWAP now intraday, and we started to move up. Now, if you were watching the tape, I kind of commentated this as I was seeing it in real time by watching the time and sales and by watching the level 2. If you were watching this closely today, there was a very large seller at 40.50, and I was watching what I really thought and how this analysis was going to play out was there was a seller at 40.50, and as the market was moving lower, basically this seller was basically spoofing the market, and there was a passive buyer buying as the market was selling off to the downside. So essentially, he acted like a wall, acted like a real present seller was in the market, as there was at least 7,000 lots that hit the offer at 40.50. Then we saw some bids start coming in as the market was moving down, and I viewed this as a buyer basically getting into a large position, getting ready to bring the market higher. So when we got that and we bounced off VWAP, I thought this was good to take the market long, stop below VWAP. I was risking about 12 points because my entry was at 10.02, around 40.40. Risking about 12 points below VWAP to make a target of 30 points, which was the previous day's high at 40.70. So about 2.5 to 1 risk to reward. Pretty good in my opinion. And then the market started moving up. We broke above that 40.50 area. And I said if we could get above 40.50 into 40.58, it's going to validate my thesis. And then longs will be on watch. I do believe it's a spoof. There's a patient buyer buying at lower prices. It's a long shot and a hypothesis, but it's not validated until we could find strength from buyers to the upside. The problem with this here and reviewing the chart after fact, again, everything looks good in hindsight, but in the moment, this looked like it was very bullish and it looked like it was going to break out, and I got my confirmation signals. But looking back in hindsight, number one, we never broke above 40.58. Number two, we had this supply zone that we put even a lower high in, and there was really not much other than this action that I saw right here to scream to the bull side. I much rather would have waited for a 4058 break and to not confirm a lower high, because a lower high inside of supply is a very bearish sign. And as soon as we got below VWAP, I stopped out at 1027 for a decent loss. And the market started coming down. We hit demand again. Like I mentioned earlier, we are not finding buyers at demand. The only way I will be open to playing longs is if new demand forms, or if we bounce off of old demand and form new demand to the upside, and or we could get a retest. Now this is kind of counterintuitive to what I'm saying, but in the intraday commentary tab, I took the market long at this demand zone. Now the thesis for this trade was very simple. I don't want to get into too much detail. I just uploaded a little bit of an in-depth recap for members in the Discord. But what I saw here was this move to the downside validated supply at the highs. So now we have supply, sellers are active, buyers are not buying at demand. However, what I liked here was the possibility of new demand forming. The way I look at the market is there's two ways you could put a trade on for the highest odds, and you have to adjust your position size for that setup. Number one, you get in prematurely, really before there's confirmation, but your risk is so low, but the possibility of it working out is also very low. So you're really risking not that much, and the chances of it working out is slim. But if it does work out, since your risk is so low, your reward will be high. Or you could wait for proper confirmation to come in. And as soon as you see it, you cannot hesitate. As soon as you see that proper confirmation, you get in. If it's too late, your risk to reward is going to be skewed. So what I saw here was the market came down, we consolidated. I kind of call this market structure demand in this consolidation period right here, that if we start to move up to the upside, especially above this high right here at 3990, which was the high of this consolidation period, that we would have valid demand that would form. And that was kind of my thesis. And in the intraday commentary tab, I said, I know Biden's speaking. However, I said, I'm liking this action down here at the lows. It's very, very hard to be long as demand has not been reliable. However, I'm open to playing long if demand does form down here and we can get a retest, smaller size. I said, Biden speaking. However, if ES SPY can establish some volume between 3990 and 4000, it should bring us a move into 4013 and then a move into 4030. Even though I'm 0 for 1 today, I'm still not letting it get to me, and I'm focusing on finding another setup. This is the key theme with this video. I took a loss earlier. Instead of getting frustrated and punching my computer screen like I see some of you on Twitter do, I'm sitting here patiently waiting for another opportunity. This was, in my opinion, a lower quality opportunity because we are trying to catch a falling knife. And I said earlier in this video, it's kind of counterintuitive to what I've been mentioning. However, you cannot argue with the tape. And as the market was moving up, volume started to build, especially above 3990 and 4000. I can only show you what I saw on Bookmap because this is historically going to show you some data that we can't see on the tape anymore. But look above 3990. I mean, look at this tail of buying volume that came in between 3990 and 4000. So, buying long off demand down here was lower quality. A little bit of a higher quality could have been once we started to find buyers intraday that this cannot go ignored. This is very strong buying. The book kind of flipped, whereas we were selling off aggressively. Now all of a sudden we start seeing some buyers come in. Picture the amount of shorts that got short today, that got short yesterday, that are built into the market, that if we start to move up, those guys are going to have to cover. And that's going to fuel a further rally to the upside. So yeah, I'm kind of going against what I'm saying by taking the market long here, but the market's unstructured. And how I look at it is, did I know we were going to rally to this extent? Absolutely not. Did I know we were going to rally today? Definitely not. But I saw something I liked in the market. And just because I said one thing doesn't mean I'm not going to react to new information that the market presents and act upon it, put risk on the table, adjust my size accordingly, and come up with a plan. I think that's very, very key, is reacting to what the market gives me. I did not expect such a buying rally to come through in the market, but I spotted it. I put risk on, and that's the only thing that we can do as traders. So I think I'm going to end the video on that note. The main lesson here is stop putting your head down after a loss. You take a loss, brush it off. The best opportunity might be around the corner. Use these 4 trades as a perfect example about being patient and waiting for a clear, high quality opportunity to take a trade, following a clean and simple process. So I'm ending it on that note. If you enjoyed this video, drop a thumbs up, comment if you have any questions, and definitely check out the links in the description below. I offer a very in-depth and educational course. It comes with access to this Discord at no extra charge. I do plan on raising the prices within the next month or so, and very important changes are coming soon. But peace out.